Hello friends, in the series of income tax law and practice, we are discussing income from salaries. This is first head of the income which is covered by the section 15 to 17. Under this head of the income, we have finished in the last session the perquisites which are taxable in the hands of specified employees. Now in this session, I am going to touch upon the perquisite again which is taxable in the hands of specified employees, say leave travel concession. At the same time, I am going to touch upon those benefits which are given to the employees at the time of his retirement or when he resigns from the service. Now, perquisite in respect of leave travel concession in India. Sometimes the perquisites in relation to leave travel concession can be granted by the employer to the employee in India, and so far as this perquisite is concerned, it is almost exempted for all employees, whether they are government employees and private employees, but exemption is granted in light of the provisions which are given in the Income Tax Act 1961. Now, so far as leave travel concession given by the employer to an employee along with family members for going anywhere in India is exempt from tax subject to provisions of Income Tax Act. It means if this facility is given to the employees only in India, then this is exempted subject to application of provisions of Income Tax Act 1961. Now, exemption is granted in the light of whether the journey has conducted by the employee by air, by rail or any other means of transport. Now, first I take up if journey is performed by the air. Now, in this case the exemption is given to the extent of minimum of 2 amount of economy class, airfare of shortest route or amount actually spent whichever is less. Now, in order to provide the exemption, we have to compare the two amounts, the amount of economy class airfare of the shortest route and amount which is actually spent by the employee, whichever is less is exempted from tax. Sometimes the journey can be performed by the rail. Then how the exemption is calculated? This is equivalent to the minimum of the two, amount of air conditioned first class fare by the shortest route or amount is spent whichever is less. It means the whichever is the minimum is allowed as a amount of exemption in order to calculate taxable income under the head income from salaries. Now, sometimes the journey can be performed by other means of transport. Now, in this case we have to see further rail connection is available or rail connection is not available. If rail connection is available, then how the amount of exemption is calculated? In this case, amount of air conditioned first class fare by the shortest route or amount is spent whichever is less. Now, in this case, of course, the journey has taken place by other means of transport, but in order to calculate the amount of exemption, we have to compare the amount of air conditioned first class fare by the shortest route with amount is spent whichever is less. Now, sometimes the journey has taken place by other means of transport, but the rail connection is not available. In this case, the exemption is calculated in the light of again two amount of first class or deluxe fare by the shortest route or amount is spent whichever is less. But this exemption is calculated only when in that particular route there is existence of recognized public transport. But where recognized public transport does not exist, then how the exemption of amount is calculated? Again we have to compare the two amounts, amount of air conditioned first class fare by the shortest route or the amount actually spent whichever is less. Now, so far as exemption is concerned, exemption is only for two journey in the block of 4 calendar years. It means if an employee has enjoyed 4 journeys in the block of 4 years, but exemption will be granted only for 2 journeys and remaining 2 journeys will be taxable. But sometimes an employee may enjoy only 1 journey in the block of 4 years, then he has privilege to carry over the one journey to the next block of the 4 years. In the next block of 4 years, he is required to enjoy the first carried over journey in the first calendar year in the block of 4 years. After that, he can enjoy remaining 2 exemption in the same block of the 4 years. It means in next block of 4 years, he can enjoy in total the 3 exemption in respect of the journey. But so far as exemption is concerned, exemption is not available for all family members, for all children. It is restricted to 2 children of an individual born on or after 1st October 1998. It means children who are born before 1st October 1998 will not be taken into consideration for this purpose. However, restriction is not applicable in respect of children born before October 1st, 1998, and also in respect of multiple birth after one child. Sometimes what happens, multiple birth has taken place after one child. It means an employee is able to get exemption in respect of 3 children. But in case multiple birth has taken place once, after that the exemption will be given only for 2 children, and in this case the exemption will not be given for 3 children. Now, so far as the meaning of family for this purpose is concerned, the family for this purpose includes a spouse, children of an employee, parents, brothers, sister, wholly dependent upon the employee. It means independent parents, brothers and sisters are not considered as the family members for this purpose. Now, so far as the exemption is concerned, exemption is restricted to expenses on airfare, rail fare or bus fare. It means if employee incurs other expenditures, then these expenses will be totally taxable, and that will not be considered for calculating the amount of exemption for this purpose. Now, we have discussed so far the provisions in relation to leave travel concession, and with this we have finished those perquisites which are taxable in the hands of specified employees. Now, I touch upon perquisites which are tax free to all employees, say specified and non-specified employees. First is telephone facility provided at the residence of an employee, including mobile facility. Sometimes telephone facility may be provided by the employer to the employee at his residence, and he is authorized to use it either for official purposes or for personal purposes, but this is fully exempted from tax. Now, some cases the income tax which is in relation to value of perquisites paid by the employer. Now, this is not taxable, but sometimes income tax which is in relation to salary is borne by the employer, but this is taxable. So, we can say income tax belonging to perquisites is not at all taxable, but income tax in relation to total taxable salary is fully taxable, as in this case we can say this is considered as discharging the personal liability of an employee. Now, perquisites to government employees who are Indian citizen and posted outside India. All perquisites which are granted to government employee and who is Indian citizen and working outside India, all perquisites are exempted from tax. It means not a single perquisite is taxable in the hands of government employee who is Indian citizen and working outside India. Now, facility of refresher course provided by the employer. Sometimes refresher courses can be conducted by the employer in order to enrich the knowledge of the employees, so that knowledge can be utilized for discharging his official duties, but this is not at all taxable. Now, periodicals and journals required for discharging work. Employer can provide the facility of periodicals and journals, and they are used only for discharging his official work. Then this is not taxable, because perquisite becomes taxable only when some benefits go into the hand of an employee. With this, we have finished all perquisites which are tax free to all employees, say specified and non-specified employees. Now, we have discussed perquisites taxable to all employees, perquisites taxable to specified employees, and perquisites tax free for all employees, say for specified and non-specified employees. Now, I start retirement benefits which are given to employee by the employer at the time of his retirement, or if he resigns from the service after completing the requisite period of service. Now, first of all is encashment of earned leave or leave salary. Now, employee is given variety of leave during his service period. He is given casual leave, but it is not subject to accumulation. Therefore, there is no question of encashment. He can be provided medical leave. Of course, it is subject to accumulation, but this is not encashed. But sometimes an employee is provided privilege leave. it is subject to accumulation as well as it can be encased by the employee. But encashment is possible only when there must be some leave credited to his account. Now, whenever he gets encashment of the leave, since this is coming in from employer to the employee, whether this is taxable or not, we have to see the provisions in relation to encashment of earned leave. If leave salary is received while in service is taxable to all employees, it means whenever an employee receives leave salary while in service during his service period, it is taxable to all employees. Say it is taxable to government employees and private employees. But leave encashment received at the time of retirement or leaving job. Now, whenever an employee receives leave encashment when he retires from the service, when he resigns from the service, then whether it is taxable or not, it depends on the types of the employees, whether he is a government employee or whether he is a private employee. If encashment is given to the government employees here includes only employees of central government and state government. Now, this is fully exempted from tax. Encashment of leave received by the government employee at the time of retirement is not the part of taxable salary. Therefore, the question of taxability does not arise. But in case of non-government employees and they are getting encashment of leave at the time of retirement. Now, in this case, non-government employee also includes employees of local authority, public sector undertakings. Now, in this case, the exemption is given to some extent, and exemption is given to the extent of minimum of 4 amounts. First is 10 months salary, 10 into average monthly salary. How 10 months salary is calculated? We just have the 10 months salary from the month in which he retires. It means if any employee retires in the month of December, we have to take the salary of 10 months starting from March to December. And second is salary of leave not consumed during the service period, taking 30 days for every completed year of service. Now, since some leaves remains accumulated in this account and they are subject to encashment, but encashment will be taking place on the basis of 30 days for every completed year of service. Now, in this case, so far as the amount of B is concerned, this is calculated exclusively on the basis of 30 days for every completed year of service. Sometimes employee can be given more than 30 days leave in the previous year, but while we calculating leave not consumed during the service period, we only consider 30 days. It means if he is given 40 days as a leave, but we consider only 30 days for this purpose. And third, amount actually received, and fourth is a 3 lakh. This is the maximum limit and which is applicable from 1st April 1998. Now, in this respect, these important notes are very important. First is average monthly salary is calculated by dividing salary of 10 months just prior to retirement by 10 months. It means in order to calculate average salary of 10 months, we have to have the total of salary 10 months from the date of retirement to before the 10 months, and that is divided by the 10 months. In this way, we calculate average monthly salary, and that is calculated for the B point. And second is completed year of service is considered and fraction of year is ignored. If any employee who has completed the service of 30 years and 7 months, then we just take out only 30 years. It means fraction of months irrespective of its number, say 6 months, 7 months, 8, 9 months will not be taken into consideration. And third is earned leave entitlement cannot exceed 30 days. As I told you just now that encashment will be on the basis of 30 days. However, leave is credited at the rate of less than 30 days, then actual leave shall be considered. Sometimes employee can be given leave less than 30 days, then 30 days will not be taken into account. For this purpose, we just take out actual leave which is granted to the employee. Now, salary for this purpose consists of basic salary, DNS allowance if employment conditions so provide, and commission based on turnover. And fifth is encashment of earned leave paid to the successor of an employee after his death is not at all taxable. It means encashment given to the successor of an employee after his death, it is not taxable in the hands of successor, it is fully exempted from tax. That is for the very simple reason that successor and employer does not have the relationship of employee and employer, and income does not belong to the successor. Now, earned leave encashment for 2 or more employers. if an employee is getting encashment leave from more than 2 employers in the same year, then the exemption is concerned, exemption cannot exceed 3 lakh in the same year. Now, since the amount is going to affect the tax liability of the employee in the year in which he gets encashment, the tax liability may be relatively higher, so that employee can apply for tax relief under section 89. So, this is all about the encashment of earned leave, and this is one of the retirement benefit which is given to the employee by the employer. Now, the second is gratuity. Now, so far as the gratuity is concerned, gratuity is paid by the employer to the employee on account of his retirement or when he resigns from the service after completing the requisite number of years. Now, this is paid because the employee has been associated with the employer for a longer period, and on account of his commendable and appreciable services, the gratuity is paid by the employer to the employee. Normally, gratuity is paid almost to all employees, provided he completes requisite number of service for this purpose. So, gratuity is a retirement benefit. It is payable at the time of retirement to employee or in the event of resignation from the service after completing requisite length of service or to successor of an employee after his death. Since gratuity is coming in from employer to the employee, so whether it is taxable or not, it depends on the fact whether the employee is a government employee or employee is a private employee. Now, we discuss the tax treatment in relation to gratuity. If government employee received gratuity, it is exempted under section 10, subsection 10, subsection 1st. Now, gratuity received by the government employee when he resigns from the service or when he retires from the service, it is fully exempted from tax and it does not constitute the part of taxable salary. But so far as the non-government employees are concerned, exemption is definitely available, but to some extent. But while calculating the amount of gratuity which is exempted from tax, we have to see whether employees are covered by the Payment of Gratuity Act 1972 or they are not covered by the Payment of Gratuity Act 1972. Now, first of all, I discuss those employees who are covered by the Payment of Gratuity Act 1972. If they are getting gratuity, then this is exempted to the extent of minimum or below. First is 15 days salary for every completed year of service if it is covered by the Payment of Gratuity Act 1972. If it is not covered by the Payment of Gratuity Act 1972, then we have to take out half-month salary in place of 15 days salary for every completed year of service. And second is amount actually received, and third is ₹10 lakh if covered by the Act. And if it is not covered by the Act, then we have to see the amount notified by the government, but currently the amount is ₹10 lakh. Now, these are the very relevant points in respect of gratuity. If he is covered by the Payment of Gratuity 1972, then these points are required to be kept in mind while calculating the amount of gratuity which is exempted from tax. First is how we can calculate salary of 15 days. The calculation of 15 days salary is calculated in this manner: 15 upon 26 into salary last drawn. This applies only in respect of employee who is getting monthly salary. But in case of piece-rated employee, means if an employee getting salary on the basis of the work he puts in, then 15 days salary is calculated in this way: 15 upon 26 is multiplied by average salary of last 3 months. But in case of seasonal establishment, if an employee is working in seasonal establishment, it means he does not remain in employment throughout the previous year. He remains in employment for some time, he remains out of employment for some time. In this case, in place of salary of 15 days, we calculate salary for 7 days, and this is calculated in this way: 7 upon 26 is multiplied by salary last drawn. Now, for this purpose, salary includes basic salary, DNS allowance in all cases. All cases means when DA is sanctioned as per employment condition or DA is not sanctioned as per employment conditions. Now, these points are very much important for those employees who are covered by the Payment of Gratuity Act 1972. Now, if any employee who has completed the service of some years with some months and period of months is exceeding 6 months, then that will be taken to be complete 1 year. For example, Mr. X, he retires after completing the service of 33 years and 7 months, then we have to take into account 34 years, and if it retires after completing 33 years and 6 months and less, then we have to ignore the fraction and we consider only 33 years. Now, if employee is not covered by the Payment of Gratuity Act 1972, then these points are very much relevant in relation to that. First of all, service of months exceeding 6 months and less than 6 months, it is overlooked. Now, for those employees who are covered by the Payment of Gratuity Act 1972, we definitely consider the fraction of months if it is exceeding 6 months. But if an employee is not covered by the Payment of Gratuity Act 1972, the fraction of months, whether it is more than 6 months, less than 6 months, will be totally left out, will not be taken into consideration. For example, if Mr. X completed service of 34 years and 7 months, we just consider 34 years. That is not so in case of those employees who are covered by the Payment of Gratuity Act 1972. Now, secondly, what is the meaning of salary for this purpose? Salary for those employees who are covered by the Payment of Gratuity Act 1972, we have the total of basic salary and DA in all the cases. But in this case, salary is equal to the aggregate of 3 amounts: basic salary, DNS allowance as per employment condition, plus commission on sales. Now, these notes are very important in relation to gratuity received by the non-government employee. Gratuity received from more than one employer on account of retirement or in the event of resignation is exempt from tax to the extent of 10 lakh. Sometimes an employee may be getting gratuity from more than one employer, either on account of retirement or when he resigns from the service. But so far as the exemption is concerned, exemption cannot exceed rupees 10 lakh. Gratuity from the insurance company, this is fully taxable, and this is taxable under the head income from other sources. Now, gratuity received and exemption have been enjoyed in any earlier year will be reduced from rupees 10 lakh. Sometimes an employee may get exemption in some past previous years in respect of gratuity, but that exempted amount will be reduced from rupees 10 lakh in the relevant previous year for calculating the amount of gratuity which is exempted from tax. And third is, gratuity received by a person not as an employee is fully taxable. Gratuity is covered by these provisions only when there is a relationship of employee and employer. If any director of a company he receives gratuity, or agent of insurance company if he gets gratuity from the insurance company, this is fully taxable, and this is taxable under the head income from other sources. Dear friends, in this session we have covered the provisions which are related to leave travel concession. At the same time, we have discussed in length the provisions which are applicable in relation to encashment of earned leave and provisions related to gratuity. Since the provisions related to gratuity are very complicated, therefore, it is very essential that it should be discussed with the help of some problems that I will be taking up in the next session. Thank you.